Hello and welcome to watching my video. So today, what I want to do is to actually give a review of the market. Right, so I will go through some of the indices and some of the big tech stock, for example, right? And maybe I'll pull out some of my old analysis, right? So I think to cut the long story short first, right? What I think is happening right now is that the market has entered into a bear territory, right? So over here, let's start with the major indices, right? So over here you see the Nasdaq, right? I want to point out a very important point for the indices as well as the stocks, right? That I want you to keep in mind when you look at all these charts, right? Firstly, is the 200-day moving average. So I'm using a simple moving average, right? Doesn't really matter whether you are using the exponential one, right? But over here I'm using the 200-day moving average and also a trend line that is drawn over 2 years, right? So from January 2023, right? So if you look at Nasdaq, you see that it has went below the 200-day moving average as well as below this trend line, right? So after it broke down, right, it actually um struggle and went up, but it was blocked by this trend line, right? So this support has already turned to resistance. As for the Elliott wave count, I've actually counted as one, two, three, and this move up is actually a four, and then we should be proceeding to a fifth wave. Next, we look at the S&P 500. It's the same situation, same wave count, right? And over here, you look if you see this, is also this trend line, right? It's just that this I did not draw from January, right? I actually drawn from October. So this entire wave is slightly, this entire trend line is slightly more than 1 year, right? And you see over here, I also have this wave count, right? Which is from October 2022, 1, 2, 3, 4, and 5. So when S&P 500 broke the trend line here, but it actually broke two trend line. One is a very short term trend line from October 2024, and this one that is from October 2023, right? So it broke two trend line at one go. And actually, it actually struggled over here, go up, and then it got rejected and came back down. Right? And then it tried to move up into a wave four. And as I said, I believe wave four is done, and we should be going to a wave five. Now let's look at Nikkei 225, right? So this is the Japanese stock market, and I did not publish this when I was doing this analysis, right? Because I noticed that the Japanese market seems to like to consolidate here for the longest time. But if you look at these arrows over here, right? When I was doing this analysis, it was around here, right? So what happens is that I noticed that the um the blue arrows that means the black arrows, the point where they touch just this trend line becomes shorter and shorter, right? And then previously it was higher low and higher high, and then the red arrow point to where it was lower high, right? And this was actually around the same low, right, before it broke down, right? And then it came back down to this point on the 11th of March, then it struggled up, right? So for Nikkei, I do not actually have a very strong conviction on where it will move. Obviously, if the market crash there, we should be expecting some beta and beta converging to one, and it should come back down too. But we should look at all these independently, right? So then for now I do not have much of opinion other than also to take note that it's below the 200-day moving average, right? And let's go to China. I was actually pretty bullish, long-term bullish on China, right? So there's a few of these older wave counts that can probably delete them, right? So let me just do it here. Right, so for China, you see that I have this is the most recent plot that I have. I believe that this is A, B, C, D, E. Right, so this is actually a corrective move, right? And alright, this is kind of like a move before the last move of up wave, right? So I believe that it will go down. Okay, so this is for China, but China is a bit weird, right? In the sense that it is still above the 200-day moving average. Okay, but in terms of Elliott wave, waveform structure, it is a down move. Now let's move to Hong Kong. Now for Hong Kong, I do have Elliott wave that is very complex because I did spend quite a lot of time over here, right? And the most recent one is that I believe that this up move is over, and similarly is actually a WXYXZ. So it's kind of like a triple combination move up, right? Even though it's very strong, right? It's very strong, right? It's still a corrective move, right? So this entire big move here, it could be a big WXY on a super cycle level, right? And this is the same as how I put this analysis on 18 March, right? I say that there's a potential ending diagonal, right? So 18 March is actually here on a Tuesday, right? One day before it hit the high. Okay, so we can take a deeper look into this, right? So you see that over here, this was the ending diagonal that I drew, right? So yeah, so it did crash down from here, and like I mentioned, the ending diagonal usually follows a very sharp move down, right? It precedes a sharp move down. So this confirms that we are right that these are ending diagonal. And this also uh, tell us that the move is done, right? And Hong Kong itself has already moved. I think it's hourly. Let me just check whether daily has moved down. So daily hasn't moved down, but it's still quite a big uh, amount that it can drop, right? Before the 200-day moving average catches up. Right, so that's it for the indices that I actually always regularly do the analysis. Now I wanted to talk about another one, which is the DXY, right? So quite long back, I actually called for the DXY short. Let me just try to find it over here. Right, so it's actually on the 15th of Jan 2025. Right. Yeah, so I call for the move down. And what has happened is that it has gradually moved down. Firstly, it's quite volatile move until February, right before it starts to move down in more tradable manner, right? So it's still okay. It's more than half way to our profit level, right? Just keep in mind, by the way, there is actually no very strong correlation between the dollar index and the indices. For those of you who are interested, you can do some quantitative or statistical study, but I've done it and I don't find a strong correlation over there, right? So I'll just take it as another asset class for you to trade. Now let's look at the stocks, individual stocks, right? Apple. Okay. I have actually drawn this also a triangle. This is more of a like a rising wedge in the more traditional technical analysis, right? And you see that I've drawn this wave up, and then it's quite clear because I've done quite detailed analysis of Apple. Right? If you check, I actually do have quite a number um, of Apple analysis, right? So yeah, so I have this more detailed wave count, Right, so over here, it went down, broke down the trend line, moved up, got stopped by the trend line. Right, so this is another classic case of support and resistance, and then it moved down. And over here, my last analysis actually is to short on rebound. Right, so it's actually at this exact point. I do mention that do not short it yet, but wait for a rebound. Right, what I did not mention is that actually this wave and this wave have almost the exact distance. So this is kind of like A is to C, right? One is to three move for in Elliott Wave, right? So in the most traditional technical analysis measurement rule, it has already reached a target, right? And we're just waiting for other signals to short, right? You can wait for candlesticks, right? Or you can look at other faster shorter term to see whether there is an opportunity to short, right? RSI or what. Okay. So this is for Apple, right? The reason why I bring it up is so that when you look at the indexes, right, you also look at those components uh, that constitute them, right? Okay, oil, right? ExxonMobil is actually okay, right? It's actually quite strong. It broke down, right? But then it shot back up and even go up on the 200 moving average. This is BlackRock, similar situation, right? So if in the case of unclear setup, we do not trade them. Microsoft, right? Microsoft previously I think this is a wave one, wave two, and I put this immediate wave one, wave two of three, and then you have a wave three down, wave four, and I'll still expect a wave five. A Google is a similar situation as the indexes, right? Five wave up, right, with all the breakdown here, and then it crashes down, right? So Google, I actually did a forecast, right? So I called for a short on the 30th of Jan, saying that the short should be done near the earnings, right? So this is uh, where the earning is, 4th of Feb. So I did the analysis around here and say, once the earnings is up, I even talk about how it will happen, right? And it happened exactly as how I predicted it to be, and it went down, and the rest is history, right? So now it is in the same case as the indices. It broke down the trend line and it is trying to get up but got rejected. Amazon is another case where I actually did uh, call for it uh, to be short on the earnings itself, right? So if we look at Amazon, right, you see towards earning, long then short, right? So this is on the 20th of Jan. So 20th of Jan is should be around here, right? So long then short, short towards earnings, and earnings is here, right? Earnings is on the 6th of Feb, right? So after earnings drop. So this is demonstrate the power of alert waves. Uh, Nvidia, right? Nvidia, I didn't really do the alert wave after uh, deciding on where the high is, right? But I'm also actually not very interested in Nvidia, to be honest, right? But what you should be looking at this point in time is the 200-day moving average, whether it will go up and get rejected on the 200-day moving average. For me, I will still think that, because I think the overall picture is a short, right? So I would find opportunities to short Nvidia instead of longing it, right? That's just because the macro view is bearish, right? So I will have a bias on the individual stocks to be bearish also. Next, we have Tesla. Tesla is a headache for Elliott Wave, right? It is just not following the rules of Elliott Waves, right? Especially after um, this move after Trump winning the election, right? It's breaking the rules everywhere. So I kind of give up trying to count the waves for Tesla, right? And what I can say is that similarly, monitor the 200-day moving average, right? And if you are like me, you are bearish on the macro view, you can find opportunity to short it or sell your longs. Meta, personally dislike Meta, right? It's a personal bias. I have stopped using Facebook for many many years, right? Because of the amount of crap inside there. And then I have the Elliott wave here, including the breakdown, right? So I did call for Meta short when it was still trying to make the high, right? That is on the 13th of February, right? 13th of February is here, right? So it's just one day before the high. Unfortunately, my idea itself has two type of stop loss, right? So yeah, even though I'm right, if I traded this, I will have I may not have I will have lost money, right? And then I would go in again on the 18th of Feb, but I did not trade this as a disclaimer, right? Just saying that uh, I was right, but one day too early. Now let's go to others. Right, there's nothing much too interesting over here, right? For AMD, um, it moved down in this jagged manner, right? And it got, let me see. So I'm doing a live analysis over here. So it actually almost hit this low, but it got rebounded. Similarly, um, I will look for a short opportunity if I'm a professional trader. Right now, I'm not. Right. So what I'll be looking at for AMD is I want RSI to move up into overbought territory and as close as possible to this 200-day moving average. Right. And then what I will do is that I will find places where there were previous resistance. So I will expect AMD to be a good shot when it reaches this price here. So maybe over here, right? 116.4 around here, right? Uh, I am a macro trader, so I don't actually touch individual stocks. But looking at the individual stocks itself gives me an idea rather, when I can actually short the indices, CFD futures, So that is for AMD. By the way, a lot of my stock analysis is on tech side. Because recent years of the Magnificent Seven, and also personally, I'm more um, knowledgeable about the tech industry, given that I uh, have a tech background, right? So Intel, nothing much to say over here other than this could be taken as bullish or a bearish setup, right? But as I said, because of my macro view is bearish, I will look for bearish opportunity to short. Similarly for IBM, for Qualcomm, Netflix. I actually did this analysis for a friend, right? I also counted 5 wave up, and so I do expect it to move down towards the 200-day moving average, right? And because this is a moving target, what I would say is I would say that it will probably easily hit 700. So I will expect it to break down the 200-day moving average. Right. So that is it for individual stock that I want to go through. Right. So Bitcoin. So Bitcoin is one of the major topics. Right. I plotted 5 complete wave and where it ends. Let me see whether I did do this Bitcoin. Where is this big stem? Yeah, I do have some Bitcoin. 26th of December. Okay, so 26th of December, I actually already pointed out the end of the entire wave, right? And I draw the wave one and the wave two, right, on 26th of December. Is it 26th December? Yeah, 26th December. Why this doesn't look correct? I may have shifted the wave a bit, right? Yeah, I believe I did shifted the wave. Um, I believe this was where the previous wave was. Then I kind of adjusted the entire wave to cater for this, right? So this is an admission on my own, right? I haven't really published anything on Bitcoin for a while, but this is the updated wave count, right? If you're looking at this, so the entire wave one, then we are into wave two, and interestingly, now we are at the 200-day moving average, right? So as similarly, I will look for short opportunities. And over here, if you are going to short it, I believe this is a good short opportunity, right? And if you're going to short it, I would say to put this to keep your stop tight, right? To do just above the today's, rather yesterday's high, right? And because I'm expecting a wave three, so I could put all the way down to 50,000. So this is for Bitcoin. And if you're shorting Bitcoin, to short um, micro strategy, it doesn't really matter how this setup is, right? Um, just now we talk about oil, right? When we talk about ExxonMobil, uh, oil actually I did analysis, and that is US oil, right? Um, so for this US oil on the 17th of March, I mentioned to wait for shorting opportunities, right? And the reason is because I see a slightly tilted descending triangle, two, one major and one minor one. Right, you can look at the actual analysis over here, but what I would say is the short will come when it hits the top. That's your first entry, or a potential first entry if you move up. But the main one will be when it breaks down from this trend line, right? When it breaks down from a descending triangle, then it should move down. But then the thing is, we need to wait for the event to happen, right, and not try to front run the chart setup. Next for Go. Go, I've actually did quite a number of analysis. Right. So on the 16th of Feb, I call for it to be neutral, but I did mention that there is another wave that will bring it up to $3,000, right? And just yesterday, I mentioned that the short opportunity has come, right? So that was when gold was 3,043, right? So I think that previously I was here on 16th of Feb, right? 16th Feb, okay. I mentioned that I expect a fourth wave, right? So third wave is still moving up, then fourth wave, then a final wave up to end this cycle wave three. Then it should come down for a wave four, right? Which is why I advocate, even though not shorting, but to keep a new to keep yourself more neutral on gold, right? But as of yesterday, I think the short opportunity has come, right, for you to do a wave four short, right? So that's for gold. Uh, I believe that is all I want to talk about in terms of review for indices, commodities, and individual stocks, right? So study these waves, count yourself, right, and assess all these and see whether your view gel with me, or whether I can convince you that uh, this is indeed a bear market, right? But as always, do your own research, and whether you're doing trading, always keep your risk tight, right? So, and finally, good luck and thank you.